Yeah, good morning, everyone. So yesterday, Fed come out with, as expected, 0.5% increase in the interest rate. But along with that, the statement was a bit hawkish, as Fed expect this interest rate tightening will continue, and the dot plot indicate that the interest rate increase will be towards 5.5% to 5.25%. The key concern is that the Fed has indicated that they need to keep the expectation of the inflation low, and as such will continue to remain hawkish. So overall, in this indicate that FY23 will continue. That is, calendar year FY23 will continue to interest rate to remain high, and in a CY24 only there will be some reduction in the interest rates. But the important thing is, apart from that, is that whatever the expectation is on the GDP and even is that in FY23, Fed is expecting positive GDP, that is 0.5%. So quite possible there could be in between 2 quarters some negativeness in GDP, but overall for the year, the expectation is that the GDP will be 0.5% positive. And interest rate already said that they expect it to reach to around 5.1% average, that is anywhere between 5 to 5.25%. So seems more of a mix indications. They are expecting softer recession, not very aggressive recessions, and the tightness of the interest rate will remain at a higher level. Once reaching to 5%, they will continue to hold on there for some time. So more of a bit negative, and we saw that impact on the US market also, and also the Asian market are seeing some corrections in that respect as well. In India, we may see some impact of the same for a sort minor corrections also in line with Asian market, what is expected. And apart from that, in commodity also, we are seeing like oil has moved up to $82, almost up by around $2. And then iron ore is also positive by 1%, and steel is up by around 1.5%. These are all more driven by China opening up, though November data from China came very negative against the expectations. So now I'll request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. This is Swati. Today, Nifty is expected to open on slightly negative note, and we're likely to witness some profit bookings at the higher level. On the technical front, the Nifty has an immediate support at around 18,570 levels. Any move below that level, we will witness some profit booking, which might take a Nifty towards 18,500 to 18,420 levels. Whereas on high side, 18,700, 18,770 will act as a strong resistance level on the higher side. So we'd like to request all the clients to book the profits, at least the partial profits at the higher level, because we might witness some profit bookings at the resistance level. Coming towards the Bank Nifty for today intraday purpose, the first support is placed at 44,000 levels. Any move below that level, we expect a profit booking, which might take a Bank Nifty towards 41,800 to 41,600 levels on the downside. whereas the immediate resistance is placed at 44,200 and 44,400 levels. So as long as Bank Nifty sustains below 44,200 levels, we will not see any positive move at the higher levels. Coming towards the Nifty Finance, 18,800 and 18,920 are the two crucial resistance level we need to keep eye on it. Whereas on a lower level, 18,670, 18,570 are the two support levels for intraday. Coming towards the stock specific, Persistent really doing very well on the technical front. The stock is trading in the pattern of high tops and high bottom. From the last two trading sessions, we have witnessed a smart pullback rally from 20 DMA, which gives a positive indication on the technical front. At the current level, one should take a buy call for a target of 4290 and 4300 levels with the immediate stop loss of 4110. Another counter on the technical front looks good. That is a Linde India. This particular stock also looks very strong on the technical front. It has a very strong potential to move upside towards 3400 levels on the higher side. Currently, stock is trading nearby 3270, 80 levels. So one can take a long position at current market price. Stop loss can be kept at 3210 for immediate target of 3390 and 3400. That's from my end. I request derivative teams to take call forward.
Yeah, thank you, madam. Good morning, everyone. So, as per derivatives data front, overall, as per the white portions, there's not much of action seen from the put writer portion, but from call writer portion, we expect on a monthly basis that some sort of pressure is being witnessed from the yesterday trading session at around 18,700 to 800 level. 18,700 to 800 level is a cautious and crucial resistance zone for the Nifty currently. Once if Nifty manages to go above 18,800 level, then you might expect the buying to be continued in the market towards 19,000 level. But if we see at the VIX is trading at a very lower level. So once if VIX gets a shoot up around 14, 15 level, then volatility will get increased and there might be some action in the market. But currently when the VIX is low, we don't expect much movement from the Nifty front, as Nifty is likely to remain in the range of 18,500 to 800 level in coming trading session. Once if Nifty manages to break 18,500 or 800 level, then only the trend will get catch up in the market. Currently, if we look at the overall PCR, or PCR yesterday closed at 1.02 level. So PCR is having support at 0.96 level on the downside. Once if PCR goes below 0.96 in today's trading session, then new short position can be created. But once if it's holding that level, then you should wait for the fresh confirmation on the downside. Currently on the stock specific front, we expect four counters which we have recommended in previous trading session also, and which looks very strong. First one would be CUB, City Union Bank. Second one would be BPCL. Third would be IDFC First Bank, and fourth would be IndusInd Bank. These four counters have seen major action and major actions building up near ATM strikes, and we expect the longs are getting added up very aggressively, and we expect some great buying in coming trading session. So that's it from the derivative front. Thank you.
Good morning. In last couple of days, most of the large banks have increased their deposit rates, including the likes of SBI, ICICI, and HDFC Bank. So the fight for deposits is likely to intensify as deposit growth continues to lag advances growth. And investors have various options today, like equity markets itself, to park their savings. So it will be a tough task for the deposits growth going forward. So that is why we believe that net interest margins are likely to peak out in the current quarter, that is quarter 3. So we would suggest investors to be cautious. Although we are ourselves bullish, continue to remain bullish on the banking sector as a whole, but one has to be aware of the valuations. Some of the PSU banks are now trading at 1.5 times trailing price to book, and some even higher, which has not been the case historically for them. And whereas on the ROA front, their ROAs continue to remain at less than 1, 0.5, 0.6 kind of ROAs. So we think some of these PSU banks have run ahead of themselves, and investors should be cautious, because in case of a correction, these could correct severely. So just to name a few, Bank of Maharashtra, Central Bank of India, Indian Overseas Bank, and UCO Bank, we think are closer to 1.5, 1.5, 1.7 times price to book, and one should remain cautious on these kind of PSU banks. Otherwise, overall, we remain bullish on the sector, and even many private banks continue to remain still undervalued, and they can outperform. Tata Motors has inked a pact with Everest Fleet Private Limited to supply 5,000 cars, 5,000 EVs. As part of the deal, the company handed over, has already handed over 100 EVs, and this news is positive for Tata Motors. Poonawalla Fincorp announced sale of its housing finance subsidiary, Poonawalla Housing Finance, to a private equity investor, TPG, for 3,900 crores. This will increase the book value per share for Poonawalla from 84 rupees per share to 111 rupees, which is an increase of 32%. So this is a good news for Poonawalla Fincorp, and we are positive on the company. Thank you.
Good morning. Gulshan Polyols has received an order worth rupees 137 crore to supply ethanol to oil marketing companies. It has also won an order of rupees 54 crore to supply ethanol to Naira Energy. This is marginal positive to the company. Thank you.
Good morning. Ramakrishna Forgings has approved an investment to acquire up to 51% voting rights of Tesoyo Manufacturing Private Limited. It's a Make in India startup company engaged in powertrain solutions for electrical vehicles. Tesoyo currently manufactures this proposed investment will help Tesoyo to use the technological expertise and manufacturing skills of both organizations to enhance its product portfolio and expand its facilities for the manufacture of motors, controllers, e-axles, and differentials. The company plans to invest around rupees 100 crores over the next 5 years, which is expected to generate a turnover of rupees 500 crores by the end of the 5th year. This is positive for Ramakrishna Forgings. Thank you.
Good morning. Gulshan Polyols received an order worth rupees 137 crore to supply 22,200 kiloliters of ethanol to oil marketing companies, and it has also won an order worth rupees 54 crore to supply 9,300 kiloliters of ethanol to Naira Energy. This is marginally positive for the company. Thank you.
Yeah, apart from this, IRCTC government has announced OFS for IRCTC, wherein they will be selling around 2.5% holding in the company. Government has around 66% holding, and they will be diluting 2.5%, but they also have a green shoe option of further 2.5%. So overall, around the 5% holding they can divert. The OFS will open today. But we see that even the floor price, which is set at around 680 rupees, share is overpriced, considering that they are likely to make around 13.7 rupees EPS in FY24, and at the price of 680, it will be around 49 or 50 times FY24 earning, which seems still costly, considering that the interest rate environment. Considering the interest rate environment which is rising, and generally the company with these type of company has an impact of increasing interest rate on their valuations. So we recommend to avoid this OFS. So I'll recommend, I request commodity team to take up from here.
Yes, thank you, sir. Good morning, everyone. Today, commodities are likely to witness some profit taking. However, the momentum is positive, so one can buy gold around 54,250 and maintain a stop loss of 54,100. On a pullback, 54,600 to 700 is likely, and for trading purpose, one can sell at 700 also, 54,700. So in silver also, we recommend to buy around 68,000 and a pullback till 68,800 to 69,300 is possible, whereby again some selling pressure could be witnessed. So all in all, a bit correction is expected, and in metal front, copper we might see testing 700 odd levels, and one can sell around 710 to 11 and maintain a stop loss of 716. And zinc also prices are likely to test 280 to 280 levels. So selling is recommended around 287 levels and maintain a stop loss of 290. In crude oil, we are seeing some profit taking after 2-3 days rally. So one can buy around 6,300 and maintain a stop loss of 62.30. Prices can test 65, uh, 50 on higher end. So we recommend to buy in crude oil. In natural gas, prices are supportive at 535, 530 levels. So one can initiate a buy with a stop loss of 520. On upside, we feel 550, 555 should be this ideal target, and where one should take profits. Yeah, that's it from us. Thank you very much.